I've got 2 children. I'm married, and I pay a tremendous amount of money on taxes. Are there any strategies that I can use to mitigate that?
Hey everyone, Carmine from Charitable. Today I wanted to react to a Dave Ramsey video titled, "How Can I Reduce What I Pay in Taxes?" I thought it was interesting because that's what we do every day here at Charitable. So let's dive in.
I called a couple years ago and paid off my house. So thank you.
Way to go.
Your advice. So very exciting.
How's that feel?
So really good.
Yeah.
Really good.
What's
So
What's the house worth?
So we bought our house for $322, and now it's worth over $700.
Yeah.
Wow.
Love it.
So yeah, super exciting. So a couple years out, and now I'm doing pretty well. Thinking about my future. I've got 2 children. I'm married. And I pay a tremendous amount of money on taxes, and just wanted to know, are there any strategies that I can use to mitigate that or make my money work for me and my family and our future?
Move out of New York is one.
I know.
That may not be a viable option.
You were going to say that.
So they joked around and said move out of New York, and half our clients live in New York City as well. And it's true. I mean, you pay a lot of taxes. You have federal, you have state, you have city if you live in the city. If you make over $250,000, then you have to pay net investment income tax on investment income as well, which is additional 3.8%. So it could get pretty costly compared to a state like Florida where there's no state income tax, no city tax. So I get the joke there, but you could reduce taxes if you left.
A mistake that people make when we get mad about taxes, and I'm as mad as anybody about taxes, I hate them, but the mistake that we can make is we start doing things that don't make good business sense or economic sense, all in the name of saving taxes. Okay? Mm-hmm. You don't want to do that.
I agree with Dave here. I mean, a lot of people are always looking to save taxes, that they'll maybe not make the best investment decision or choose not to sell an investment because of a tax bill. But, you got to put the investment in business first and taxes behind it. There is a way to do it together, but don't get caught up in spending more money to save less in tax. It doesn't make any sense.
So don't get so motivated by this that you get yourself in trouble. So, that you get yourself into some bad.
I want to pay my fair share, not 52%.
No, that's not the point. It's not about your fair share. No, anybody that pays federal income tax pays more than their fair share, because 48% of the people in the United States of America pay 0 federal income tax. That is not fair. That's not reasonable. So the idea that you've done something wrong and should be punished is asinine. Yeah. But anyway, the only thing I would tell you to do is it's probably going to be worth some money to spend on good tax preparation. Getting a really stellar, super smart tax person in your corner.
Once again, I agree with Dave here, is getting someone who knows your situation well based on what you do, whether you own a business or if you work for a company and you're a high earner. It pays to have a good tax prep person, CPA in your corner. But I think one thing that, I don't know if Dave mentions and we'll find out, but having them in line and coordinated with your financial advisor, financial professional as well, right? For example, at Strata, for all of our clients, we work directly with their accountants. We help them with tax strategy and tax planning, and we work with the accountants. We never want a case where the advisor's recommending something and then the accountant's recommending something and they're conflicting, and then it's just a bad spot for the person to be. So my recommendation would be, I agree with Dave, have a great tax person. You probably have to pay for it, but it's worth it, especially if you're making good money. And make sure they're aligned with your other professionals too, not just your financial advisor, but also maybe, your attorney or whatever other professionals you're using in your life.
It might cost you a few $1,000s more, but you guys are making enough and have enough that that it's worth it to look at every little thing. The amount of money I spend on preparing our taxes and managing our taxes every year is ridiculous, but it it saves me more in taxes than it costs me, so I do it.
It's a great point he makes there too, is the amount of money you spend on tax prep or tax strategies, if there's any cost to it, you should be saving more in taxes.
I want to know what every rule is, what every law is that I can utilize morally and legally to keep those bozos from my money.
Another great point. And remember, the tax law changes a lot. It's not set in stone, so it's something that needs to be revisited each year, and the strategy can change year over year.
And so I'm gonna spend the money to find somebody that knows every one of those things. And they're not illegal things. They're not loopholes. They're not tricks. They're not something that's done wrong. All that kind of stuff. It's none of that. It's just things in the law that there's no way, the tax law is there's so much volume to it that to have somebody that really knows what they're doing is worth the money. So I would just tell you, look for a tax ELP, go to endorsed local provider at RamseySolutions.com for your area and interview a couple of them. There'll be 2 or 3 of them will pop up in your area, and just find, you're looking for somebody super smart and really knows their stuff and works with high income people and knows every little nook and cranny. But don't spend money. Don't go spend $10,000 to save on to create a $10,000 tax deduction, because that only saves you $4,000 in taxes.
Good point, and I think I said it earlier, is you don't want to spend more money to save less money on taxes.
And that's the kind of crap people do when we get mad enough about taxes. If you want to do that, just increase your giving to your church.
Could be giving anywhere, church, charitable organization, that can help lower your tax bill.
At least the money's going to something good. If you want to turn $10,000 into $4,000 tax savings, just increase your charitable giving. You can do that without, it's not fancy at all.
Remember, if you're going to make donations to charity that's sizable, always look to donate stock instead of cash, especially if it's highly appreciated. That way, you don't have to sell the stock, pay the capital gains, then donate the cash. You can just donate the stock and get the full tax deduction.
But it's not a mathematical trade you want to do very often. I mean, you want to do good generosity, but I'm talking about you don't do this for tax reasons. You do it for giving reasons, because the economics of it, you're turning 10 into 4. Yeah. And that don't work.
And real quick, it's really important that for our broader audience that you really have a tax pro in your life, no matter how much money you make.
Once again, talking about tax pro, and I agree, so I want to say it again, like tax pro, but coordinated with the other professionals in your life, so that way everyone's on the same page for your tax strategy specifically, especially someone that knows your state, because each state's different and things change.
The federal plus the state taxes, having that tax pro, Dave, is huge because of the minutia, loopholes, and all those things. It really is important.
Well, I've got friends that that are people of serious net worth and serious income, and when they sit down with a pro and they look at what California has recently done with an extra 15% on people that make serious money, they said, I really love California, but I'm not going to live here anymore.
Absolutely.
And they left. Yeah. And I can name 3 or 4 people off the top of my head right now that have left there in the last 3 years because of their tax law.
Yeah, some states you pay more tax than other states, and not saying you have to leave a high tax state and go to a lower tax state, but I think you just have to know what the impact is, right? If you stay in the example he's using in California versus moving to Tennessee or Florida or Texas with no or lower state income tax, like what is the impact of that? If you want to stay in a higher tax state, great, but make sure you're running the numbers on your, on your financial plan so you know if you can stay there or not. I can't stress that enough, that a lot of times when we talk to new clients, they're like, hey, I live in New York, but I think I have to go to Florida because the taxes are too high. And I always ask them, do you want to go there, or do you think you have to go there? And most people say they think they have to, but after doing the analysis and going through, sometimes it turns out you can stay, but here's the trade-off, right? And I think anything financial planning or tax planning, there's always a trade-off. And as long as you understand that, it helps you make better financial decisions.
You may want to choose to stay. Not saying that Rebecca needs to leave. We were joking with her about that.
Exactly my point earlier. You might choose to stay, but it's important to understand the impact and the trade-off.
My buddy could choose to stay in California if he wanted to stay there.
That's right.
But he needs to know what it's costing him.
That's correct.
To be there.
Yep.
And so they left. One of them's building a house over by you.
I know.
And he lived there his whole life.
Yeah.
So he's particularly pissed.
And also palpably excited about what his income is going to look like after officially moving to Tennessee.
With zero income tax.
Yeah. Bouncing up and down.
We don't have a state income tax.
Yeah.
Another point I want to elaborate on a little further, I don't think they're talking about it enough, but especially when you shift from like working to retiring, it's all about how much your after-tax income, right? Like if you need 100 grand to live hypothetically each year, you don't have to pull out 150, 175 to net that $100,000. You might have to, depending on how your accounts are set up, but it's all about your after-tax income. And I think that's what they're referring to here is like this guy in the example is moving from California to Tennessee, so going from high state income tax to none in Tennessee. So his assets are just going to last that much longer because he doesn't have to pay that tax drag on the state income tax. So something to really think about as you're approaching retirement, going into retirement, even if you're still working. It's just always be aware of how much you're paying.
And we're one of quite a few states that doesn't, and the economies are booming in every one of those states.
Go figure.
There's your Art Laffer analysis of this, right? So, but that's true. I mean, it's a math thing.
Couple different things. Good video. I think they made good points. I don't necessarily always agree with Dave Ramsey, but this one makes a lot of sense. Some things I'll just say is if you're thinking about how do I reduce taxes and you're a high earner, especially if you're like a W-2 worker and you're an employee, there are things you can do. Take advantage of the tax codes, number one. But I think the most underutilized one is making sure that your investment income is super tax efficient, right? Make sure you're not causing any additional tax bills that you don't need, and looking at how your interest is taxed. Is it tax exempt? Is it taxed as ordinary interest? Look at your dividends. Are they qualified dividends? Are they non-qualified dividends? Are you doing tax loss harvesting in your taxable brokerage accounts and things like that? In addition to that, there are a lot of awesome tax efficient strategies that you can use that can help lower your income. Thanks for watching today's video. If you want to see exactly what we do for our clients in terms of reducing their tax bill, beefing up their investments, and planning for the future, or if you want to just book a quick telewealth call, click on the link in the description. See you on the next one.